What's poppin', guys? All right. So today, basically, I want to go over the moving average indicator again. Basically, this is an update or a revision, just in case some of you didn't understand the first time, or you're having difficulties understanding it and why the moving average indicator is so important and why it can help you with a lot of things. A lot of people have questions with when should they buy a stock? When should I jump into a stock of a company that I've done the research on because I want to get it at a good price so I can make a good return, because that's what the whole stock market is about pretty much. Is you want to buy at a good price, for the most part, right? A price where it's selling under its usual value. It's selling underneath its highest point, in trading. So you want to buy it there so it can limit your risk also when it drops. Because let's say you buy a stock at a super high price, like the all-time highs, and the next week it drops like $20, right? So you're losing $20, you're losing money. But let's say you would have bought it when it dropped at 20, right, or even lower than that. There's a possibility that it can always go lower than that, but you're mitigating your risk, you're minimizing your risk, because it's like they've already had that substantial drop. So it would just take a lot for it to continue to drop that much. So it's always about where the price point is that you buy a stock. During this whole, COVID, it basically dropped a lot of prices down, and you were able to get a lot of stocks at extremely low prices. And unless something out of this world happens again, it's most likely not going to drop to that extent. Yeah, the market is dropping now. It's going down, but it's not going to drop to that extent anymore. It's already at a pretty high price point. So this is just a video about how to use a moving average indicator to help you buy a stock when it's on sale, basically when it's trading at a pretty good price that you can make a decent return on. Okay, so the moving average indicator. So now we're on Yahoo Finance. I actually downloaded the app finally. So I advise you guys to download the app as well. You will need it. So I want you guys to go. Let's look at the DIA, the Dow, because it's doing the worst out of the S&P 500 and the Nasdaq. It's doing pretty much the worst. So let's see if it's trading at a good price point where you can buy it at. Okay, guys. So all right, we're gonna look at DIA. So type in a ticker symbol, DIA, top, and you want to click that. All right, and it'll take you to this screen. Then you want to you see where it says max, hit that like square icon right next to it. And then I have Bollinger Bands on. Let me take that off. Then I want you guys to go down to where it says 1 day, 1 month, and chart at the bottom, right? Scroll down there, and I want you to change the 1 day to year to date, so it can count by days instead of minutes and all that stuff. And then I want you guys to basically go to the plus sign right here at the top, click on that and do add indicators. And then you see it's the first one for me, and then hit moving average. And then you just do add. You don't need to change anything. And then here comes the lavender line, right? As you can see, I have it on the 50-day moving average. So that means that basically it's calculating the 50-day average price point for DIA, the ETF, right? And if it's below its 50-day usual price point, that means you're getting it at a cheaper price. It's like going back in time 50 days and you're getting that stock at a cheaper price. So this, will be a good price point for a lot of you guys who want to buy it. You're getting it at a really good price point. As you can see, it's well below its 50-day. It's trading at about 75 to 75.91. The highest peak right here, one of the highest was at 288. And then you want to go over here, and this was at 291. So you're making, if this will eventually go back up to that price. So you're making a good return if you were to buy it here. Okay, guys. So that's what you want to do. Use a moving average anytime you're looking to buy into ETF, buy into a stock, but make sure that you do your research first, right? So let's look at 200. It's not below, it's 200. The 200 is a lot of time. It's 200 days. That's a lot of time. And most stocks are not going to be below its 200. But if a stock is and you like the company, that I'm telling you would be a good time to buy. So look, this is when Corona hit. You see this big dip under the 200? This is when the COVID crisis hit. So look how steep this is and how low it was, right? So that's what I'm telling you. That most things may not get to that point again, but again, you can always use a moving average just to get it less, like, the 50-day average, or you can do 20-day, or even 75, anything you want to do. So this is 200. So it was below 200 for a minute, and it finally started climbing back up. As you guys can see, it's still above it now, and it's most likely going to stay that way unless we have something extremely crazy go on. And, then would probably be a good time for you guys to buy, right? So you always want to buy when things are trading at a low price. Let's look at another one that I like to look at. POD, something that I recently bought. I'm losing money on it because I bought it at 103. It's right now, I believe it's at think it's at 100. So it's basically a REIT. I like it because I want dividends. I like dividends. I want to make money off dividends when I'm elderly. I want to have that type of inflow. I like monthly dividends. So I got SPHD. I got Realty Income. I got Stag. We're gonna go over those. I'm gonna show you my monthly dividends and why I like them, and how you guys can also find some REITs for yourself if you want. But REITs, you got to be careful with that. And let's see. So we're on PLD right now. It's trading at $100 and dollars and 20 cents, and as you can see, it's well below its 50 day 50 day moving average. So it's well below that. And, this will be a perfect time for anybody who's looking to buy it to get into it now. I bought it like at 103, so it was above at that time, I'm pretty sure. But, now would be a good time for you guys to buy it. You can also change it if you want to 75 and see. It's even at it's at 75. Like, it's even lower than that. Again, this will just give you a good price point to buy a stock. Okay, guys, and that's why it's one of the most important indicators that you can use. All right. So look, as you can see, the highest peak was about 108. You get it now, you're making, because it will eventually go back up to 108. So you'll be making, $8 off that, or even more, because it's not going to just stop or continue to plateau. It will most likely go down some more, but it's going to eventually go up because I've looked at the balance sheet. I've looked at income statement. I've looked at cash flow. I've looked at the company itself. I've done my own research. Okay, guys. So, that's what I want you guys to look at. It's extremely easy to do, easy to use, and it will save you a lot of headache. A lot, So just know when you're getting POD or you're getting DIA, you're getting it at it's below its 50 day moving average. So you're just like you went back in the past 50 days and you're copying it, or, stuff like that. So remember, the stock market is a marketplace. You want to get the best deals. And I hope you guys really enjoyed this video, and I hope it clarified a lot of stuff with the moving average. I'm pretty sure it did. Thank you guys so much, and peace out.